Today I will show you the 3 indicators that will change everything for you. Hi everyone and welcome to my channel. If you're new here, my name is Gabby Trades and I'm a day trader with background of trading crypto markets as well as traditional markets. Now, I started my journey back in 2017 and since then I have been going through hell and back many times, which I'm sure a lot of you traders out there can relate to. Now, I have found out that a lot of the traders get one thing wrong, and that is that they're looking for the perfect mechanical strategy to execute without even having any clue how to read a chart. Now, this is the main problem, and this is what's causing you to strategy hop, meaning changing your so-called trading edge that you paid for tens of thousands of dollars to learn from a forex guru or a crypto guru with a rented Lambo and a fake lifestyle. Now, I can tell you for a fact that 99% of the people you watch on YouTube don't even know how to read a chart. And I have had actually a lot of encounters with many of them on different types of events. And I can very quickly tell that they actually have no clue what they're talking about. Now, the truth is I can count the people that genuinely know how to trade on my fingers. And yeah, but anyway, that was my mini rant. Today, I want to show you what I use every day on my trading view charts to support my trading decisions. And by the way, if you find this information useful, please like and subscribe. And after you watch the video, if you want to get the indicators, the link is in the description box below. All right, let's move on. Cool. Okay, I have some background sound, so I want to isolate a little bit. Now, the first indicator, when you add the indicators, by the way, you're going to get 3 indicators. So the first one is going to be the fair value gaps and the order block indicator, Gabby fair value gaps order blocks, right? So this is what you're going to get with the first indicator, and this is one of the basic ones that I believe every trader that trades price action needs to understand, right? Now, if you've watched my live streams before and you know me, you know that I like to mark these buy zones, so-called buy zones, and also I like to mark the sell zones on the chart like that. Now, I base these areas on this indicator that I have developed for you guys. So that's simply the order blocks. Now, these are the order blocks on a weekly time frame. The beauty of this indicator is that you can actually get the order blocks and the breaker blocks on any time frame. Right here, you just go on settings on order blocks. You can change the colors if you want to. You can pick how many fair value gaps as well you want to see with that indicators. I've picked 20. That works for me. You can pick 10, 5, but that means you're not going to see everything. But sometimes the charts get a little busy. So that's why I like to have the indicator on, mark my stuff that are important to me, and then close the indicator like that. Okay, so this is all I see after I finish with this indicator, the buy zones and the sell zones, and then I put it back on to see where the fair value gaps because these areas are very important, especially when they are combined with a fair value gap. That makes the area even more strong. Now, we're going to go in depth a little bit of what these things mean. Now, to start with, let's talk about order blocks, right? Now, I need to explain to you what they mean. Think of it as a key level on the price chart where a big player, right, like a bank or institutional trader, has placed a significant order. That will be either for buying or selling. Now, this level can act as sort of a magnet for price, drawing it back even after it's moved away from it. Now, these order blocks will mark oftentimes like support and resistance areas. A good example, I think, is this one down here. As you can see, price mitigated once, twice, and this could also act as a support zone, right? An order block is typically identified by looking at the last bullish or bearish candle before a significant move that would break structure, right? For a bearish order block, you want to find out the last bullish candle, such as this here. On a weekly time frame, this was the last bullish candle that broke structure to the downside. right? Now, meaning that the last candle that closed higher before the market made a sharp move down, breaking the structure by creating a new lower low. Now, this bullish candle is your order block because it represents the point where big players have likely placed their sell orders. Okay. Now, for a bullish order block, you are looking at the last bearish candle, this one, right? You want to see the last bearish candle, meaning the last candle that closed lower before the market made a strong move up, which broke structure by forming a new higher high. Now, this bearish candle, therefore, becomes your order block, and this is where the institutional players have placed their buy orders. Now, okay, let's try and put it all together, right, with an example. Now, imagine you're analyzing this chart and you can spot an order block, right, that hasn't been touched by price before, just like this. It has just developed. Structure has been broken. This is the last bullish candle. You also notice, though, that there is liquidity above it, right? In this case, that's not visible because we're looking at Sol, which, hasn't been higher than $300. But in a case where you're examining the chart and you can see that down here, you are going to be interested of whether there is any liquidity above that or below it, right? With this, you're going to use the second indicator, which is the liquidity indicator, which is going to show you where the liquidity is, right? The idea is that when price revisits the order block, it could trigger the buy or sell orders of those big institutional players that have been left stuck in that bearish or bullish candle before the big move to the upside or to the downside. This is like the most simple way I can explain it to you guys. But order blocks and breaker blocks are something that price action traders are trading a lot. I don't want this video to be super long, so we're going to move on with the fair value gap. So the indicator is also going to show you these ones on the chart. Now, what is a fair value gap? You guys, we've spoken about this a lot. Let's remove this so we can see it. Now, it is a 3-candle formation where, for example, like this one, and this one down here, where there is space in between the last wick on the first candle and the first wick of the last candle. This down here will be your weekly bearish, in this case, because price is going to the downside, this is going to be your bearish order block. Now, what are, bearish fair value gaps. Now, first, institutional players actually play, again, a significant role in these gaps because when large institutions like banks, hedge funds, or major market players enter the market with substantial orders, their trades can cause a sharp move to the upside or to the downside because their orders are so large, they can't always be filled at the current market price, which is leading a rapid movement in price as the market tries to accommodate their orders, right? These sudden movements create a fair value gap as the price jumps from one level to another without really trading in between. This is the case of the fair value gaps. Now, what can we do? We can do a summary. They're formed when there is a sudden and aggressive move in the market, which is often driven by institutional orders and significant news events as well, by the way. So these gaps represent areas of imbalance where the market hasn't had the chance to establish a fair value, as simple as that. As a result, the market is seeking to revisit these areas to fill the gaps and restore price balance. Now, understanding why gaps form is actually very crucial because it will help you anticipate where the market might go next. So you can do it manually, right? You can draw those fair value gaps manually, but having this indicator is going to give you a significant roadmap and an edge, because you want to be able to open the chart and have these in front of you immediately. Because if you start marking them one by one with the order blocks and everything, it's just a lot of time consuming analysis that you want to save yourself, right? You want to save your mindset and your energy, because actually executing the trade is where that energy is going to be needed for, right? But anyway, yeah, these ones are going to give you a roadmap of where price might retrace to, and it's going to give you then an opportunity to understand where you can enter or exit a trade. Now, we spoke about the indicator settings. Here, you can have 20, 30, 40 fair value gaps on the chart, bullish or bearish, whatever you want. The interesting thing actually that I haven't mentioned about this indicator is that you will also see the mitigated fair value gaps. So for example, we had a fair value gap here that was bullish, right? That formed, what's happening to my drawing? What is happening? Okay, anyway, let's give it another try. Yes, this one between this candle and no, it doesn't like to draw. Okay, whatever. So anyway, this is the weekly bullish fair value gap that was mitigated. The beauty of this indicator is that you're also going to see these areas, and these are very important. And I will teach you on Discord. And by the way, if you guys haven't joined, tab in. It's in the description box. You can get it's completely for free. I'm gonna make some courses there as well to educate you on what inverted fair value gaps is, as well as more on fair value gaps. But yeah, basically this is a mitigated fair value gap, and this is how the indicator is going to show it to you, which is very useful. Because let's not get into inverted fair value gaps right now, but you want to know when a fair value gap has been mitigated, and you want to know if you had a body close below that fair value gap, because then that means that the fair value gap is invalidated. You want to have all this information available for you. And when we learn about inverted fair value gaps, you will quickly understand why this inversion here, which happened with the new bearish fair value gap, can be a very good entry on a retrace for a short position. Now, we're not going to go into too much details about that. But yeah, these are the order blocks and the fair value gaps. Like I said, the higher the time frame, the better. I personally use weekly, daily, or 12-hourly order blocks and breaker blocks, because I want to see them as I chart down, right? So for example, this is the weekly order block, and if I move on a daily time frame, I will still be able to see the weekly order block right here, and then I will make my decisions as price is moving towards or away from it. I can see Trade Travel Chill is texting me. She wants to hang out. Okay, let me finish this video first and we'll hang out. But yeah, so you can refine your areas as soon as price starts coming back to these areas. You can go back on the weekly and be like, hey, what's happening here? I have a sell zone up here, which you can mark easily like this. I have a sell zone here on the weekly time frame. You can even put weekly if it's easier for you. And when you go on the lower time frame, what do you know? What do you know? You can also see that you have just below that sell zone an inverted fair value gap, which means that could be a very good area for a sell. And then when you go down on the lower time frame, right, you can see that you have a daily bearish fair value gap, right? Daily bearish fair value gap, which means that you're going to observe when price comes up here, whether it's worth it to take a short from here. And again, you can use the order blocks even on the lower time frame to make these decisions even more refined. But for that, what I like to use is the second indicator that I've developed for you guys, which is Gabby sweeps signals. Now, this indicator is great and is based on my personal trading strategy. Let me zoom in for you guys a little bit here. It's an indicator that works solely and entirely on the 4-hour time frame. So imagine what we did here. We went from a weekly time frame and we moved down to a 4-hour time frame to see where price is currently drawing. So imagine we've done that analysis and price was closer to our levels. When I open the 4-hour chart, this strategy is going to confirm to me where price is heading on a lower time frame. And even if I want to scalp trade on the 5-minute, on the 15 minutes, I'm using the 4-hour to tell me. Now, this is strategy that I have been using for years, and it's refined, and it's great. Now, a lot of people in my Discord have the indicators, and I've actually given them to a few people to test for a few months, and they have had great results. They all share their P&L cards on Discord. So you guys, when you join, you're gonna see. But I'm telling you, this is the best thing that works for me. You can try it and see how it goes. But yeah, so basically how the 4-hour works is very simple. You don't have to do anything. It's just going to show you where the current target is for price, meaning where price is going to next. That doesn't mean that when you have the target to the upside, price can't go down or like retrace or whatever. It can even, in some cases, invalidate the trade, but that will happen because the strategy is based on fractal highs and lows. This target up here is only going to be invalidated if price draws all the way down under this low. As I'm filming this is on the weekend, and I don't trade on weekend because this kind of like stuff happen most of the times on a weekend. Okay, so that's very, very possible. The price is going to go down, trade into our next zone here, which is a zone of invalidation. And then we're going to have to wait for confirmation on where the next target is going to be. It's a very, very interesting strategy. I don't want to go too much into detail, but okay, let's dive a little bit, not too much. So for example, the strategy works based on a fractal sweeps. So this is a fractal candle right here. What is a fractal candle? A fractal candle is a 5-candle formation like this. If it's on the higher end, this is going to be the fractal up here. You're going to have 2 candles on the left side and on the right side with lower lows right on each sides. Okay, and then if it's you know, a candle such as this, it means that on a lower time frame we have had 5-candle formation like this. Again, this is your fractal, and then you have 2 candles that are trading what's that, lower lows and then higher highs on each side. This is basically what a fractal candle is, and the strategy is based on a fractal candle sweep. So we had a sweep here, for example, here on the fractal candle, and then we had a bullish close on the 4-hour, which is then suggesting that price is gonna target the next fractal candle, which in that case, before the weekend was up here, but I don't trade the weekend, so this is why you get this these sort of results on this chart. Yeah, so basically this was the target when price was trading down here, but then it started to lose its power over the weekend, and then it created another fractal candle. So now, as per the strategy, until we are bullish, the next fractal that is closer is going to be our target. But you don't have to worry about that. All you need to worry about is where the current target is showing on the chart. And this is clearly here. But like I said, I don't trade the weekends. The weekends is huge manipulation time, and I'm not interested in wasting my capital in trading the weekends when there is little to no volume most of the times, even though the algos are still trading over the weekend. All right. So this is that indicator. It works on the 4-hour. You can even mark it if you want, right? Such as like that. And you can say, okay, This is my, wait, with a shift, I can make it straight. This is my target, like that. So when you move on a one hour time frame, you know that price is trading in order to take this this high. But again, like I said, this is the 4-hour strategy that I've used for many years. There is a little bit more to the strategy in terms of entries and everything. Again, for that as a basis, you can use the order blocks, the breaker blocks, the fair value gaps, right? And best traded is during sessions such as US Open or London Open, when there is a little bit more volatility on the chart. Because once we have this volatility, then we understand a little bit better with all the traps and everything and liquidity on the chart of how we can enter. Now, moving on, we have the third indicator, which is the liquidity indicator, which is also going to show you support and resistance areas on the chart. This is one of my favorite indicators, and all together combined, they draw this picture for you on the chart. When you have all these three indicators, you don't need to have them all at the same time opened on the chart. But like you see, for example, here, right, I have my weekly area here. Do you want to see the price? Okay, let's move it a little bit. So, right, we have the weekly sell zone here. And I've opened now my liquidity indicator on the 4-hour as well as the current target price. So I know that price is going to do something around the weekend, try to get this, or maybe range and do whatever. We don't care what price does during the weekend, but the liquidity indicator is going to show you where massive liquidity lies in the market. So that means where people have their stop losses on, or their orders that are lying and have been stacked, right? This is for purely for charting purposes. That doesn't mean that you can't go and check all the Binance shorts and Binance longs and all these market makers. You can have that information as well, but this is purely for charting purposes. Now, like I said, this indicator is going to give you support and resistance zones. They're going to come with levels like this, lines like that. And you can often see that these areas usually hold. So the beauty is that this indicator works on every time frame. So now you see on the 4-hour time frame, you have SOL liquidity at the $220 level, which is great. And what do you have above that? Also, you have a sell zone. And what else did we have over there? An inverted fair value gap. So we know that price might just do that to come up here to take that liquidity, tap into the inverted fair value gap, and then send it back down. So I'm going to be, no surprise, looking for shorts in this area after this liquidity is taken. Now, another thing that this indicator is showing you is going to be the lower lows, lower highs, higher lows, lower lows, which is very important for us traders to identify where there is a market shift, change of character, or whatever you guys call it, right? Reversal patterns, whatever. So like I said, on the 4-hour, this is the liquidity here. You know, we can talk about liquidity for hours. I don't want this video to be too long. But again, this could be trap traders, this could be breakout traders, right? In this case, I can clearly see that this is a breakout trader that has potentially entered short and has been sweetly taking profits here to the downside. You know, and if they don't close profits, they are going to be taken out, right? So what has happened here? Price has traveled to, you know, ranged a significant move to the upside, break of structure. Let me clear it for you guys a little bit so you can see it. So everyone was looking at this chart broke structure, and breakout traders do that. They wait for a retrace. They wait for a retrace to the breakout area, and then they enter shorts, and their stop loss is somewhere above this high. So this is what makes this high now liquidity. And if you look at this pattern, is a triangular pattern as well. What else you can see is you can call that a weak high. Why is that a weak high? It is because this high is responsible for this low. And that low didn't take this low. Does that make sense? I'm going to repeat it. This high is a weak high because this high is responsible for this low, and that low didn't take this low. So that automatically means that this high is a weak high. Now, the beauty of this indicator is that it formulates not based only on people that have put their stop losses above a zone. And don't forget, you guys, these charts are traded by algos, right? Algorithmic machines. Think Larifink, think BlackRock. Like, they've been working for years. They know how the retail trader will position themselves, so they will execute them when time is right. So this is what we want to anticipate for, right? Yeah, so like I said, the good thing about this indicator is you can see the liquidity on a lower time frame as well, on a 15-minute, on the 5-minute as well. Let's draw here. Let's draw here. So it's just a complete carnage. I can see them just being liquidated left, right, and center, right? Some people entered long here. Why? Because they're like, oh my God, this is going to be like a rotation point. We're rotating. So I'm going to enter here. I'm going to put my stop loss just below here. Nope, taken out. So this is what these indicators are showing you. And this liquidity is very, very significant. And like I said, support and resistance level are automatically calculated for you guys using, Lux Algo, which are the best indicator developers in the industry. I am so proud and super happy that they developed me, because I've been in this industry for so many years and I've seen them grow and just create this incredible company full of like top-notch developers. And we are lucky to have them build our strategy in an indicator. Oh, one more thing I forgot to tell you. Another important liquidation zones, which you're going to see using that liquidity indicator, is the Asia high and Asia low. Now, these are very important points of liquidity as well, especially used in the Forex markets, but they work perfectly fine also on equity markets and crypto markets. Extremely important liquidation areas, because you have to think like a market maker. These indicators are going to help you to do that. As soon as Asia session stops trading and London session comes in, what they look to do is to liquidate absolutely everyone and collect all the orders from Asia session. This is what happens in a very, very simple language. So it's very important for you to see where the Asia high, the high of the trading, the highest trading point of the Asia session is, and the lowest point of the Asia session is. So then you can understand, once these areas are taken, once the high is taken, there is usually a reversal that takes place to come and target the Asia low, such as in this example right here in front of us, like we can see, right? Price developed the high, price developed the low. London started trading, London took the high, and then it immediately dropped down and took the low. This is something that happens on a daily basis, not guaranteed, of course, but more often than not. So these areas are extremely important for us to look at. So that's pretty much everything for the indicators, you guys. If you find that useful, like the video, subscribe. And I usually do lives. This is my first pre-recorded video, but it felt like a live as well for some reason. I don't know. I'm going to go hang out with Trade Travel Chill right now. If you don't know who she is, go check out her channel as well. She's a good friend of mine. And yeah, that's it. If you have any questions, you can join the Discord, where I'm going to explain more if you have anything that you don't understand. But these are very, very basic indicators that anyone can use and can actually make sense of the chart.